In the flurry of the news around this company, what might have gotten lost a little bit is they're going to be reporting earnings in early February, and they did issue a statement around what to expect. They said that they'll be reporting results that are, quote, slightly favorable to the top end of the previously reported quarterly guidance ranges. If you want to go back and look at what those numbers are, company guided for $355 million to $380 million in revenue and adjusted losses of somewhere between $75 and $100 million. Near the top end of that guidance, it's about 30% year-over-year growth. Evan, this is a deceleration from what we've seen from this company over the last couple quarters.
Right. I mean, when they went public so early in their life that they're able to put up these really strong growth numbers, but they're coming off of a really small base. So it's kind of misleading how impressive that is. But now that we're seeing growth decelerate, as they're trying to ramp this ad business and they keep struggling, and they've been trying to automate it to kind of scale it up. But I mean, they're making some progress, but there's no question that the business is slowing down a little bit in terms of growth.
Yeah, and they didn't provide any specific DAU guidance in that quarter before, but they did say that they expected to lose users sequentially from Q3. So for me, one of the things that I'm most interested in with this upcoming report is, okay, they're hitting near the top end of what they were expecting in revenue. They'd said that they were expecting to lose users. Is that what's happening? And if that's happening, where's the revenue growth coming from? Where's the outsized impact coming from? Is it that they're really putting out more impressions? They're creating more ad opportunities than they thought they were going to? Is it that prices for ads are rebounding? Because those are kind of the two big dynamics for an ad-based business.
Right. I mean, obviously, user metrics will be important as always for any social media company, and like you mentioned, pricing. But I always like to look at their cost structure. We've also talked about this a lot over the years that we've been covering this company, but I still just think their cost structure is not very sustainable. So looking at hosting costs per member, per user, rather, and comparing that to the average revenue per user, and just seeing if they're making any progress with scaling, because the way they have the company set up, it's just so difficult to actually scale, which is what most people tend to like about tech companies.
Yeah. The spreading the fixed costs out over more and more users is what makes the numbers work for so many of these companies. When you have variable costs tied to usage, you just can't do that.
And I think on the ad side, there has been a lot of anecdotal reports about just the kind of quality of the ads on the platform just deteriorating, continuing to get worse and worse, which doesn't really give you a lot of confidence. If they're not attracting quality advertisers, that's also something to kind of be on the lookout for.
Yeah, I've joked with you in the past that I've gotten some very untargeted ads on Snap, ads that are not meant for a 28-year-old man, but maybe a woman, which is something that speaks to a lot of the results that we see in the digital marketing space, where Jason Moser has talked about this on Market Foolery, but I believe it was a Cowen research study they put out to a bunch of ad buyers and said, if you could choose between putting all of your clients' ad budgets between Instagram stories or Snap stories, where are you spending your money? And 100% of respondents said Instagram stories. That says all you need to say about where Snap stands in ad budgets. And when you're going up against a Goliath like that, it's just really hard to make up ground.
Yeah, I'm not surprised by that 100% figure at all.
Well, we might briefly follow up on the results if there's anything surprising in there, but I think it's always good to give people a couple of different things to look at as a company's reporting.